Welcome to AI Explains ICT. You ever have one of those days where it feels like the market has a personal vendetta against you, like it knows exactly where your stop loss is? Well, what if I told you it kinda does? In this video, we're diving deep into ICT's core content, specifically Month 4, Episode 2, to pull back the curtain and decode the market's secret agenda. By the end of this, you'll understand the one force that drives every single price move, and more importantly, how you can finally get in sync with it.
All right, so here's our game plan for today. First, we'll pop the hood and look at the liquidity engine, what actually fuels this market. Then we're going to zoom way out to find the higher time frame narrative, which is basically the market's real story. After that, it's all about hunting those super clean, low-resistance runs. I'll give you a simple trader's cheat sheet to make this all repeatable, and we'll finish up by walking through a practical example so you can see exactly how this works.
Okay, let's get right into it. If you learn only one thing today, please let it be this. Behind every single tick up or down on your chart, there is one and only one driving force: the hunt for liquidity. It is the fuel, it is the engine. Honestly, it's the only reason the market moves, period.
So what even is liquidity? Let's make it super simple. You know all those buy stops that traders place above a recent high? And all the sell stops they tuck below a recent low? Well, think of those as giant pools of money just sitting there. The big players, the institutions, what ICT calls smart money, they need to tap into these pools to fill their massive orders. So the market literally just moves from one pool of stops to the next. That's the game. Now this is where things get really interesting. See, there are two flavors of liquidity you need to know about: external and internal. External is the obvious stuff, those stops sitting outside the current price range, above the highs and below the lows. That is your destination. That's where you should be looking to take profits. Then you've got internal liquidity. This is the more subtle stuff inside the range, like fair value gaps or order blocks. Price needs to dip back into these areas to, let's say, rebalance itself. And here is the absolute key. Internal liquidity is where you find your entries. You buy the dip into internal liquidity and you sell the rip into external liquidity.
All right, moving on to Section 2. So we've established that the market is always on the hunt for liquidity. Great, but that just leads to the one question that keeps every single trader up at night. Where is price actually going? I mean, with all the chaos and noise on the 5-minute chart, what's the real objective? What's the big picture plan? Because if you can figure that out, you have a massive, massive edge over pretty much everyone else.
And the answer, my friends, is not on the 1-minute chart. It's not even on the 1 hour. You have to zoom way out. You have to learn to ignore all that lower time frame noise and start where the big institutions make their decisions, the monthly chart. This is where the real story begins.
Okay, check this out. This is a monthly chart of the dollar-yen. And what jumps out at you? Right there, that big red box, that's a fair value gap. All that means is that price shot up so fast that it was only offered on one side of the market. The market absolutely hates these kinds of imbalances. It's like a vacuum, and its long-term agenda, its secret mission, is to eventually come back to this level to rebalance the books, so to speak. This gap becomes a giant magnet pulling price toward it.
And this right here is the whole point. Once you've identified that big institutional level target, everything else just clicks into place. It's like having the answer key to the test. All that noise on the lower time frames, it's not random anymore. You can see it all through the lens of this higher time frame objective. We know where the train is headed, now we just have to find the right station to hop on.
Okay, so when you know the market's true destination, you can start looking for what ICT calls a low resistance liquidity run. And trust me, this is the holy grail. This is what it feels like to trade with the current, not against it.
A low resistance run is one of those beautiful, clean, fast moves where price just slices through old highs or lows like a hot knife through butter. There's almost no fight, no struggle. And why does that happen? Because you are perfectly in sync with the institutional order flow. You're not trying to swim upstream. You're riding the wave with the big money.
All right, so let's start zooming in from our monthly chart. Here's the weekly. You can see it, right? Price is steadily making its way up toward that big monthly fair value gap we found earlier. The path is getting clearer. The bullish story is being confirmed.
And now, we drop down to the daily chart. See how the story is unfolding piece by piece? Price is just methodically climbing that ladder, making higher highs, higher lows. Every one of those little short-term highs is just another pool of external liquidity being swept up on the way to the main event, that big monthly target.
And boom, look at this 4-hour chart. This is a perfect illustration of the concept. You see how price just goes? It slices right through those old highs without even blinking. There's no chop, no long drawn-out fight. It just moves. That's the signature of a low-resistance run. And it's only happening because the big picture, the monthly chart, is bullish. The institutions are behind this move, and these little highs are just speed bumps on the highway.
Okay, I know that was a lot of theory, so let's boil it all down into something super practical. We're going to create a simple 4-step framework you can use. Think of it as your trader's cheat sheet for reading the market's agenda.
Here it is, 4 simple steps. Step 1, you've got to start big. Go to your monthly or weekly chart and figure out the bias. Where's the market really trying to go? Find that big target. Step 2, now you can drop down to your trading timeframes, the daily, the 4-hour, and start hunting for setups that are flowing in the same direction. Step 3, this is your filter. ICT says to look for setups that have the potential for at least a 40-pip move. This keeps you out of the choppy nonsense. And finally, step 4, your execution model. Enter on a pullback to internal liquidity and target an exit at external liquidity. Buy the dip, sell the rip.
Now, let's talk a little more about that 40-pip rule. Why 40 pips? Well, it's not some magic number. It's a quality filter. It forces you to be patient and wait for the A-plus setups, the ones with real room to run. If you can't see a clear path for price to move at least 40 pips, it's probably not a high-quality trade. You just skip it and wait for the next bus.
All right, time for the fun part. Let's take everything we've talked about, the theory, the framework, and watch it play out in a real trade example. This is how you take these ideas off the whiteboard and execute with real confidence.
Okay, so here's a 15-minute chart. Now remember, we've already done our homework. We know from our top-down analysis that the higher time frames are screaming bullish. So what does that mean? It means we are not looking for shorts. Our only job is to find a good reason to get long and join the institutional flow.
And would you look at that? A textbook setup. First, price pushes up hard. Then we get the pullback. And where does it pull back to? Right into this beautiful bullish order block. That's our internal liquidity, and that's our entry signal. Our target? Easy. The external liquidity sitting right above that short-term high. Price taps our entry, and then, whoosh, it takes off. Swift, clean, decisive. That, my friends, is a low-resistance run in action.
You know, there's a quote from ICT that just perfectly nails this entire concept. He says, "You want to be trading with the least resistance. Aligning with the monthly and weekly charts helps you find it." It's really that simple. It's not about being a genius predictor. It's about finding the path of least resistance and just going with it.
Look, if there is one single phrase I want you to burn into your brain from this video, it is this: context is king. A perfect-looking setup on a 15-minute chart means absolutely nothing if you don't understand the story being told on the monthly chart. That higher time frame context is what separates gambling from professional trading. It is everything. So I'll leave you with this question to think about. Now that you know how to look for the market's true agenda, how is that going to change the way you look at a chart tomorrow morning? Are you still going to see a bunch of random squiggly lines, or are you going to start seeing the story?
Hey, if you got some value out of this video, do me a favor and hit that like button. And of course, subscribe so you don't miss the next one. And seriously, if you have any questions at all, drop them in the comments below. We have a real human who reads and responds to them. All right, that's it for me. Until next time, safe trading, everyone.